Hello everyone, my name is Albert. I'm financial analyst and today we are going to talk about socially responsible funds. So what are the mutual funds that are socially responsible? Let's start with a little bit of history here. So we go into the slaves and cotton picking. So those guys are, gathering cotton and there are songs played like that. Okay, so basically what happened, a lot of slaves have been brought to America and they have been, picking those cottons for the benefits of the plantations and the, plantators, their owners, basically. So it's funny, but actually several companies that operate in American South as of right now, they kind of inherited the property rights of those companies and indirectly they own the fruits of labors of those black slaves that worked at those plantations. So it was a little bit of history and it was a while ago. And more recent example will be of American railroads. And let's see their pictures. So for example, this guy. So if you look at this train, this is like a steam train. And let's take off the sounds so we could talk a little bit about it. Just a second. And let's going back to our original train here. So this is a train which was built around the World War II or before that. And basically what they have been doing, they have been transporting the slave laborers from Russia or Poland or other, conquered countries to Germany so they could work for the benefits of the wartime Germany and produce some fruit of labor. They worked at homes, they worked, in the factories, they work in the different agricultural settings because there've been shortage of people. So basically they've been trying to replace this shortage of people. And basically what's happened here, these, German railroads that belong to Wehrmacht, they've been later acquired by, believe it or not, more modern German railroads. And here is a picture of them. So when you actually, riding a 100 miles per hour or even 500 miles per hour speed, speedy railroad car, you may think that they are actually the, predecessors of the German railroads. So basically they acquire their assets and indirectly they have their, railroads, cars, and dealt with consequences. So you may not want to invest in those guys if you want to buy the socially responsible mutual funds, just as you do not want to invest into those companies that may be directly or indirectly connected to the slave labor in the South of America or elsewhere, or connected to the slave labor of, indirectly related to German railroad as of modern day. So someone may ask, it was a while ago, 200 years ago, 70 years ago, etc. So we go into the modern example. And this brings us to the black diamond market. And here we are. Hold on. Yes, here we have some diamonds. They look nice and pretty and probably pretty expensive, especially when they cut into those, beautiful shapes that reflect a lot of lights from different plates here. But you should be sure where they come from. If they coming from some, mines of, for example, Russia or South America, it's probably okay. but some of them could be actually coming from the black market from certain parts of Africa. And what is bad about the black market, that basically some of the warlords, they control certain part of Africa and certain countries, and it could be a child labor involved, could be slave labor involved in those mines where they actually getting those diamonds from. And what is the worst part, that they sell those diamonds in the cut or pre-cut form on the black market and use the finance that they got it from this market to finance their war efforts by machineries, tanks, guns, machine guns, etc., and different equipments and parts, so they could continue to be warlords. So basically financing the war efforts in between those countries or tribes. So it's kind of built on sweat and blood of those people that work in those mines, or those people that actually serve as soldiers for those warlords. So let's see the actual mutual funds that invest in a socially responsible manner. And this brings us to our beautiful spreadsheet, which is here. So if you look here, I use a formula based on Sharpe ratio, alpha ratio, and top tail holdings, which explains the statistical spread from the center of distribution, which is Sharpe, or riskiness of the fund, which is alpha, and top 10 holding, which explains about diversification of the fund or how it is diverse. For example, 2.28 being very diversified, and let's see what else do we have here. 4.7 here being less diversified or more risky. So there are some funds here like Seasonal Sustainable Core Opportunities, which may have lower annualized total return based on 10 years, and there are bigger annualized total return. So I choose the best. For example, those that are marked as this one in blue, for example, Stewart Small Mid Cap Enhanced Index, they have 8.34 and 8.65% annualized total return on average for the last 10 years, and the predicted return is 5.57 and 5.48. And remember, 2015 could be not the best financial years because of the political changes, different changes in economic market. So as you could see, the predicted return is smaller than the ones that actually happened. So remember, the formula predict on the conservative side. It could be more than this and could be less than this. And if this formula predicts this return, but actually the actual return for 2017 will be 8% or 7%, that means that this fund actually exceeded our expectations, which is good. So let's see something marked in green here. It is for funds with a bigger return, like American Central NT Growth or American Central NT Mid Cap Value. So they have 8.66, 9.73, and 8.19% for the 10 years annualized total return. And also their predicted return is 3.50, 5.94, and 2.83, which is kind of lower than is happened for the last 10 years on average. But like I explained, there are various political and economic factors that involved into this process. So let's see to something else. There are also Ave Maria Growth, Ave Maria Rising Dividends for 8.37 and 8.16, and their predicted formula return for year of 2017 here. And the last but the biggest is the part here, which explains Parnassus Core Equity for institutional and investor class, Parnassus Endeavor for investor class, Parnassus Fund investor class, and Parnassus mid-cap investor class, and accordingly, once again, they have 10 years annualized total return or average for the last 10 years of 9.80, 9.58, 12.64, which actually is the biggest for Parnassus Endeavor investor class. And actually the predicted return is the biggest here as well among all of them in this part. And also 10.03% and 9.13%, and predicted is 5.69, 4.56, and 4.37%. So those funds, the mutual funds, are doing the socially responsible investments, which I explained previously on examples of black slaves picking the cotton, and also German railroads and the black market diamonds. So those funds, for example, I would, if I want to, I would invest into the biggest performers here, making sure they're doing the biggest return. For example, Parnassus Endeavor investor class, and I would use the predicted formula return for year of 2017, and I would know that this guy and all the other guys in this table are doing socially responsible investments, and they doing for the good cause, like organic growth, investing into the organic agriculture, for example, or something that reduces the pollution of the water and air, or some new innovative technology in the internet, microbiology, semiconductor business, whatever it could be, something that is socially responsible. So once again, this is a socially responsible fund. You could use it. If you like it, please put thumbs up, sign up for my channel, and like me, and leave your comments as always. This is Albert, and I will talk to you soon in my next video about some other interesting financial factors and mutual funds. Have a nice day. Bye.